Now joining us for a Kenyan market update, Aly-Khan Satchu, the CEO of Rich Management. Thank you so very much, Aly-Khan, for joining us. It's great to have you on the program. So as I mentioned, the NSE is approaching that 7-month high, and we're seeing a lot of positivity, Aly-Khan. What is your sense? I mean, are you expecting to see this rally continuing? We've got the NSE, the best performing bourse in Africa last week.
I think we're in quite a sweet spot, actually, and we've probably taken 1/3 of the total gain we're likely to see this year. So I'm quite bullish. Obviously, there are curveballs out there. The main curveball is the fact that if we row back from our commitment to the ICC, then I think, you know, all bets are off. But essentially, I think people have become too despondent about Kenya, and I think we continue to see momentum. Breadth is improving. We've had some outstanding returns. Uchumi's up 72% this year, KCB 40%, equity 27%, Scangroup over 30%. So I feel that, you know, there's enough momentum here, and there's probably another 66% of upside in comparison to what we've already seen.
Okay, this is quite exciting news, Aly-Khan, and we're starting to see also the banks performing quite well. As you mentioned, KCB, one of the stocks that have been doing quite well. I mentioned the shilling. I mentioned that we could actually see a bit of a depreciating shilling if the central bank does not mop up the excess liquidity. And if we do see this, it could add a lot more pressure into the overall economy, and then adding more pressure to the banks, because we know the consumer could also come under pressure. So do you think that we're sitting at a pivotal point where the risks might just outweigh a lot of the optimism?
I think we are at a pivotal point. With respect to the shilling, obviously the central bank is committed to a firm shilling, and I think that's the right policy response. Oil remains a big wild card, and as you correctly noted, local fuel prices jumped quite spectacularly yesterday. The price of premium fuel went up 6 shillings, a big move. So I agree with that. I think there are risks out there, but essentially my sense of it is that the apogee, the moment of maximum pressure is behind us. The central bank will delay reducing rates, but market rates are already moving directionally the way we want to see them. And I think if you wait around too long, you know, the train might well have left the station, I'm afraid.
Let's also now delve into Mumias Sugar. We've seen the stock being perhaps under the spotlight because it hasn't been performing quite well relative to the rest of the stocks on the bourse. Appointment of a new CEO, Aly-Khan, do you think that this is going to change the fortune of Mumias Sugar?
Well, just as you said, it's underperformed the wider stock market by 23 percentage points 12 months through today. It's been one of the laggards. It's trading on a PE handle, 3 PE handle. I think it's way oversold. I think the CEO who has exited had his eyes on a different prize, a political one, and had lost a little bit of focus. I think there's room for the share to bounce. Peter Kibati was previously the chief financial officer and has a pretty good handle on the affairs of the company. I see room for upside, probably a 10% pop on this news of a change of helm.
Let's also now delve into the fuel prices, Aly-Khan. We've seen a significant increase coming through across the board. This is creating quite a bit of concern. We've actually seen some economists and analysts in Kenya coming out and saying that the government should be doing more, such as even thinking about subsidies. This obviously could put more strain on the government's balance sheet, but what is your solution? What is the solution in your mind to avert some of the increases that we're seeing on a global level?
The subsidy idea is practically a criminal one. The government has had no success ever at any subsidy program that it's ever instituted in its post-independence history. Forget that idea. That will just become a trough for the boys. Essentially, the problem here is that, you know, we tend to lag the fuel price move. Fuel prices were higher, the crude oil prices were higher 4 to 5 weeks ago. So the adjustment happens to us on a delayed basis. I think we've got to liberalize the fuel economy if we're going to try and cope with this type of situation that we're now in. I, for one, think the best approach is a completely free market. And we have yet to see that in the fuel space. So it is a risk, it remains a risk. I think the noose is tightening around Ali Khamenei's neck in Iran. I think prices will rebound second half globally, and therefore I remain concerned, and this remains the key exogenous risk to the rather optimistic scenario I was painting.
Absolutely, and this could also impact banks, not banks, well, you know, overall corporates in Kenya quite significantly. On that note, I'd actually like to touch on Scangroup. You mentioned it a bit earlier that it's up around 30%. It's been doing quite well. Results expected tomorrow, Aly-Khan. What have you penciled in?
Yes, correct. Well, at the half-year mark, they were up 87% versus the previous half-year. I think it's going to be somewhere in that range, 10 percentage points either side of it. It's going to be a real strong number. I think Scangroup is in a real sweet spot. It's riding a rising tide of advertising spending across sub-Saharan Africa as the big multinationals seek to grab mindshare. They are in a prime position. WPP's Martin Sorrell has raised his stake to around 33 or 34 percentage points. And I think it's a very interesting prospect. The float remains very thin. We could see some sharp price moves once those results are released. But make no mistake, this is a strong counter, and I think it's one to buy on the medium term because it is the advertising agency. It's been consolidating all these small agencies across sub-Saharan Africa. They're about to enter Nigeria. It's a good story, I think.
So, Aly-Khan, we've also been hearing quite a bit of news coming through that local fund managers are now moving into equities. You mentioned, I think you alluded to a bit earlier when you talk of a lot of the foreigners also heading back into the market. Would you say there's going to be sort of a fair mix, Aly-Khan, with regards to who's going to be participating? Because we don't want to be sitting in a situation where you've got a lot of foreigners invested in the market, and if something happens on a global level, then we see a market meltdown once again and, of course, risk aversion towards emerging markets.
Interesting point, but if I can take it back a couple of steps, I think what we're watching now is a big macro allocation by global fund managers who are underweight sub-Saharan Africa, moving into the sub-Saharan African space. We got a long way to go. If they should be allocating 2.5% of their funds to Africa, I think they're allocating about 0.1 or 0.2%. That's the rising tide, which I think we're witnessing here in Kenya. The rally this year has been led by foreign investors. You can see that on the share register of a number of counters. Safaricom, where I think the foreign investor element has raised its interest by 10 percentage points when I checked last. So I agree with that. The local fund managers have been hiding in the safety of the bond market, which has been paying very, very handsome rates. But I think, as you correctly alluded to, they cannot miss this rally anymore. We've had some very big returns, and they're going to significantly underperform, the overall equity market. They tend to move in a herd. They don't want to be too much out of sync with each other, but move they will. And I suspect they're moving already. The early ones have already started. So I think, we're watching better breadth, better depth develop, but this rally was led by foreign investors.